let's try speaking again. Maybe I'll take a lesson tonight. Dr. Anish Shah, we're going to catch up with him.
Well, and a couple of folks in our last hour talking about fixes.
Yep.
What to fix the U.S.? Well, there's a population fix to that. Can't wait to catch up with Matthew Iglesias from Vox. Amazing.
And fixing the climate. We got a solution for that as well. It's the subject of a new Netflix film, so we'll get into all of that in just a moment. But first up, let's get a check on world and national news headlines. For that, let's check in with Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. The U.S. is taking some steps to sanction a number of Iranian individuals associated with developing Iran's nuclear and ballistic missile program. Treasury Secretary Steve Mnuchin says new sanctions are targeting the Atomic Energy Agency.
This administration will use every tool at our disposal to stop Iran's nuclear, ballistic, missile, and conventional weapons pursuits, which uses directly to threaten and terrorize the rest of the world.
The move comes after the U.S. insisted over the weekend UN sanctions on Iran would snap back due to Iran's failure to comply with its nuclear weapons commitments. Financial stocks are trading lower today after an investigation by the International Consortium of Investigative Journalists discovered J.P. Morgan Chase, Deutsche Bank, and HSBC Holdings were among global banks that keep profiting from, quote, powerful and dangerous players in the past 2 decades, even under U.S.-imposed penalties on the institutions. The analysis found Deutsche Bank disclosed $1.3 trillion of suspicious money in the files. J.P. Morgan disclosed $514 billion. President Trump is making it clear he wants to move quickly to fill the Supreme Court seat left vacant by the passing of Justice Ruth Bader Ginsburg. He called into Fox and Friends this morning to say he's eyeing the end of the week to name his pick.
We have a lot of time, tremendous amount of time. I think it should be voted on and done before the election. I think that will be good for the Republican Party, and I think it would be good for everybody to get it over with, because it's always controversial.
Ginsburg died Friday night. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
This is an interesting story.
This is an interesting story. So Martin Braun and Amanda Albright talking about tax revenue. It's something that we've talked about a number of times throughout the course of the pandemic here. And New Jersey, California, seeing more tax revenue than expected. So maybe all those millionaires won't get taxed after all, Carol.
Yeah. Don't hold your breath. Yeah, I think that train has left the station. So yeah, state tax revenues in some parts of the U.S. are rebounding. So we're talking about August sales tax receipts in New Jersey, which was hit very, very hard, my home state, by the virus, rose 3% from a year earlier. And some nonpartisan legislative analysts are forecasting that revenue will exceed Governor Murphy's projections by $1.4 billion for the fiscal year. California too, Georgia, their collections are on the rise. Ohio's Cuyahoga. Am I saying it right? Cuyahoga. Let's all say it together. Cuyahoga.
It's a great song by R.E.M. actually. That's how you can always remember it.
County, home to Cleveland, dodged almost all of the devastating blows that it once predicted. So that's kind of interesting.
Yeah, you do wonder whether all the pain has been felt, though, to be honest. I mean, of people not going back to work.
They still had losses, though, right?
Yeah, absolutely. So we'll see. Maybe we're living in a world where not as bad as we thought, like not catastrophic, feels pretty good. So we'll obviously continue to track this. But this has been a key debate, right? From a federal perspective and from a fiscal stimulus perspective is, do you need to come in and sort of buttress some of these states and municipalities? I would imagine that a lot of states and municipalities may be reading this and saying, that's not the case for us.
It still feels pretty painful. We'll listen to this. Preliminary figures from 40 states show total state tax revenues were down by about $28 billion or 7.5% from March through July. So, and that compares with the same period a year ago. So we're still down. And, I don't think we're out of the woods yet. And it's interesting, the conversations I've had since I've been back in the office today, everybody's like, so you're getting ready for round two?
Yeah, seriously.
Unfortunately.
Cuyahoga.
Cuyahoga.
Say it with me.
All together. That's our word. When you hear that word, Cuyahoga.
And the Ad Council. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So a new trading week is underway, and it is very much a risk-off session for U.S. equities. A lot of risk being taken off the table. Right now, the S&P fluctuating very near a two-month low. We're down about 2.3% right now. We've got weakness in material names, also transportation shares, part of the industrial group, and specifically the airlines being very hard hit. Collectively, the S&P airline stocks are down about 7%. You know, this industry is bleeding about $230 million a day. And then globally, half the fleet has been idled, which takes us to the coronavirus and the possibility that we'll see a lot more new restrictions, particularly if you look at what's happening in the UK. Financial stocks today being very hard hit. We had a report from the International Consortium of Investigative Journalists detailing suspicious transaction at global banks, including JP Morgan, Deutsche Bank, and HSBC. Right now, the Dow off about 3%. In the NASDAQ market, the composite index is down just about 1.6%. We're seeing long-term interest rates come down. 10-year Treasury losing about 3 basis points in yield. We are at 66 basis points. A lot of dollar strength today, interestingly, with the Bloomberg Dollar Spot Index up 0.8%, gives us a weaker yen and a weaker offshore Chinese yuan. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thanks so much. You are listening to Bloomberg Business Week. Well, so much going on in and around the Capitol when it comes to politics, the election, policy, and decisions being made.
Yeah, just a little going on.
Just a little bit going on. Following it all is Josh Wingrove. He's White House correspondent for Bloomberg. He joins us on the phone. All right, so let's start with what I think is probably top of mind for just about everyone in Washington. The passing of Ruth Bader Ginsburg inspired so much admiration and so much celebration, even from the president, who has, not always been the biggest fan of the liberal wing of the court. And yet this turns very quickly, Josh, into a political fight like we haven't seen in a long time. And I'm going to say it, we've seen some political fights. What's going on?
Yeah, I mean, everyone's trying to figure out when this nomination will come and who it will be, but it is coming. It will be someone, and President Trump today is beating the drum to get a vote before the election, as opposed to in the sort of lame duck post-election haze. And this is, of course, enraging Democrats, and of course is at odds on the face of it with what happened in 2016, when there was a lot more runway before the election, and Republicans stalled or blocked President Obama's nomination at the time. So this time around, they're saying that Republicans are arguing that it's different. They're saying it's not hypocritical. They think that because there's a Republican Senate and a Republican White House at the same time, that this is just fundamentally different from 2016. But bottom line, a lot of them seem just to see this as too good an opportunity to pass up. President Trump talked this morning of 4 or 5 women. All of them are women. He's going to appoint a woman, being on his sort of short list. We've reported that 2 of the leading front runners are Amy Coney Barrett and Barbara Lagoa. Certainly, those betting odds seem to be swirling around those 2 names. So, it remains anyone's guess. It looks like it will be Saturday when we hear from the president on who his pick will be.
And I want to get into more on the possible replacements on the Supreme Court. But I do wonder, Josh, does it matter to President Trump and the upcoming election whether this gets done before the November election? Because, I mean, technically, Congress or the Senate can do it afterwards, correct? There's enough time. In other words, I've been seeing it takes on average 70 days to get a nominee through when it comes to a Supreme Court nomination. So help me out here and help me understand what the significance of when it gets done, at least for the Trump campaign.
Yeah, I mean, I guess they're gaming it out now, or at least that's what they've signaled. If, it happens before, then you kind of avoid the political kind of cringe of having senators who maybe lost their election to casting deciding votes, people like Cory Gardner in Colorado, for a lifetime appointment to the court. Some of the people he's talking about are 48 or 52. I mean, these are people that will serve for decades. If you put it after, after that, then of course these people might have to vote for it. Mitch McConnell seems to be acting like he doesn't have all that much concern that this thing won't be able to go forward. Republicans can lose 3 people and still get the confirmation. They've sort of, had pushback, but not firm no's from 2, or at least not both of them have given firm no's. So they still have some wiggle room, and they sure are acting like they think that this thing will be good. On the flip side, there's polling showing that Americans don't want this rush. They don't want a vote. A pretty strong majority of Americans, including really mixed feelings in the Republican Party. So there's for sure a risk here. And we look at all the fundraising that has happened in the Democratic Party. Ruth Bader Ginsburg is an icon to liberals in America. I mean, this could be profoundly motivating for Democratic voters, or at least would be Democratic voters. I mean, President Trump is already getting clobbered by Joe Biden when it comes to women voters. I mean, if he's seen to be, moving too quickly or pouncing too quickly, in a week, for instance, when we're going to have services or memorials for Justice Ginsburg, that could further exacerbate that gender gap, and a really hugely stark gender gap we're seeing in this race. I mean, it's like there are 2 different elections going on between men and women.
And so, Josh, do you get a sense, we got a minute left, then we're going to come back and talk to you a little bit about TikTok, but do you get a sense of how soon we'll see it really reflected in polling, kind of how this is playing out for the electorate?
I think it'll be a while, because I think we're going to see it most closely reflected in state-by-state cases. And some of the signals we've had so far are that, the Republicans have taken some of the states as almost lost causes, Arizona, Maine, that kind of thing. This battle might come down to more like Iowa, North Carolina. But honestly, I think if you ask some Republicans whether they would be comfortable gambling with the Senate majority and the prize is getting another Supreme Court pick, you'd find some Republicans who would say, you know what, pressing a Supreme Court pick might be too good to pass up, even if it means we risk losing a majority. Whereas, Mitch McConnell certainly doesn't want to not be majority leader. Mitch McConnell, he might try to, he's going to try to have his cake and eat it too. He's going to try to push forward, ram forward if he has to, the nominee, and somehow make the math work that they still will have a majority, after this voting happens.
All right, hang with us. We're going to come back and talk to you a little bit about one of the other big stories, which is the TikTok on TikTok. You and your colleagues did some fantastic reporting about sort of how this all came to be and where it may go from here, because it is far from certain based on the deal that actually got done, and especially when you put it up against the proposal and essentially the point of this whole thing to begin with. So more with Josh Wingrove in just a second. It's Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, TikTok.
Yeah, I mean, this has been one of the most fascinating and unusual deals we've ever seen. The collision of all things we're obsessed with: politics, business, technology,
China,
trade,
US.
all of it.
Yeah. So
plus dances.
Plus dances, especially by your family.
Totally. Big TikTokers there in the Kelly household. We're going to get into it with Josh Wingrove. He's got the latest from Washington staying with us. But first, Doug Krisner's got an update on everything happening in the trade. Hey, Doug.
Hey, Jason, a lot of risk being taken off the table today. Dow Industrial Average weaker by more than 2.9%. The S&P very near a two-month low. We're down about 2.4% right now in the S&P at 3241, and the NASDAQ Composite is weaker by more than 1.5%. A lot of concerns for the market today. There's the valuation concern, what Fed policy means. There's the U.S.-China relationship, and then coronavirus. Now, U.S. deaths have approached 200,000, and the U.S. new caseload is now in line with a one-week average. Earlier, we reached out to Dr. Joshua Sharfstein. He is Vice Dean of the Bloomberg Johns Hopkins School of Public Health. He told us there is definite signs of progress.
One is certainly that we're finding the virus in more people who are at lower risk, so the rate of people getting very sick is lower. The other thing is that there's just a better understanding of the virus, so for people who do get sick, they can get oxygen faster, and if they go into the hospital, there's better treatment for them, so they're less likely to die.
That is Dr. Joshua Sharfstein of the Bloomberg Johns Hopkins School of Public Health. The school is supported by Michael Bloomberg. He is the founder, majority owner of Bloomberg LP, the parent of Bloomberg Radio. We're seeing a lot of strength in the dollar right now, with the Bloomberg Dollar Spot Index up 0.8%. We've got a weaker yen and a weaker offshore Chinese yuan. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thanks so much. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser here in our Bloomberg Interactive Broker studio. Let's get back to Josh Wingrove, White House correspondent for Bloomberg. All right, let's talk TikTok, because we had a deal, we thought, and we still have a deal, but
can I just say, going into it, it felt really sketchy. Like, this whole process, Josh, has felt, right?
Yeah, or like ad hoc at times.
Yeah, that works.
Is a good way of putting it.
Just I get triggered just hearing the word TikTok because of how many emails I've had subject line TikTok over the last month and a half. But it's just, so this deal, I mean, it's sort of been leaking out here and there. We still don't know so much about it. What we do know is it doesn't really meet the criteria that the president set out, I mean, at all. And yet he's speaking positively of it. On the weekend, he just sort of dropped a bomb of news that he tacitly or preliminarily confirmed it. So where does that leave us? Well, it leaves us subject to the whims of Donald John Trump, because, if he wanted certain things in this, like, for instance, a sale of the U.S. unit, that's not in this deal. And so what they've done is punt a week the restrictions that were coming in on TikTok. It's possible they could punt them again a week if these talks continue. But the bottom line is that Trump is speaking positively about this deal, while at the same time saying that if the data is not secure, then he will, revoke his support for it. And that, of course, is going to have folks worried.
Is that Trump speaking? Is that CFIUS speaking? Like, typically when a deal like this, CFIUS, it would be very clear. They would be very in control. There would be no questions about what needed to be done and whether or not a deal was going to go through. And it would take much longer than it is.
I mean, this is unconventional because this whole deal is sparked in the first place by the president himself. And we have one of our colleagues, Nick Waddams, is reporting today that it was, in fact, that Tulsa rally in July, or June, in and around there, that first rally since the pandemic the president had, where the turnout was sort of an embarrassment. It wasn't full. He promised it would be full. It wasn't full. And TikTok users had, signed up, but with not the plan of going to that rally. That, according to this report, had angered some people in the White House and kind of gave the TikTok hawks, if you will, a bit of an opening to pounce. And since then is when we've seen the president sort of really ramp up his language. So, I mean, is it CFIUS or is it Trump? I don't know. I don't think anyone knows really
But that's terrifying. Don't you find that terrifying a little bit in a situation like this?
I mean, we got so much going on, so many
worrisome
crises.
at least.
What's another mixed one? But I'll say one thing, this is occupying a lot of the president's time.
Yeah.
Obviously, the Supreme Court fight is going to occupy a lot of the president's time. So, there's only so much time in the day. I just have a lot of trouble seeing where that leaves any talk of stimulus money. I mean, if Congress is ripping itself apart over the Supreme Court, I mean, if there was hope still of a stimulus deal, this doesn't increase the odds of a stimulus deal, to put it lightly.
Okay, so I was going to sort of end the conversation on that exact note, Josh, which is where are we on anything else that's not TikTok or Supreme Court, and specifically stimulus? Because I read something this morning that said, well, maybe this actually gives cover to Mark Meadows and Steve Mnuchin, Nancy Pelosi, and others to, sort of quietly outside the spotlight put something together.
Well, we had sort of two tracks that were blending. On the CR, which is the government funding deal, it's looking good. Things are looking okay there, although, Pelosi is putting a bill forward that doesn't meet the White House needs, so, it's not nailed down yet. But for a larger stimulus bill, I mean, we're not really anywhere. I mean, the Democrats and Republicans are entrenched. A lot of Republicans are saying publicly that they don't see a lot of need to rush another bill because the economy is recovering. Of course, that leaves the millions of folks who are still out of work, facing or already have faced eviction. They're waiting for Congress to act, for Congress to do something, and there just does not seem to be a lot of appetite. I continue to be a little surprised by what seems to be more optimism on Wall Street about a deal than there is on Capitol Hill. There just really aren't signs that they're anywhere near close to a deal.
I have to say, Josh, with everything going on, like you said, between the virus still, more stimulus, the pandemic, obviously, the Supreme Court, I have to say, I almost feel like TikTok is a party trick. And like, am I missing something? Has this been thrown out there for some reason? It just seems so odd that this is such a big story and continues to be one, and takes up so much of the president's time.
I think Trump does care about it because he thinks that it's sort of Chinese spying, and he's mad about China for a range of reasons, including the pandemic. He did kind of tip his hand a little bit today, I think, because he talked, when he called into Fox and Friends this morning for 45 minutes, he talked about the need to create competition for Facebook. So you remember Trump a little while ago has been complaining about these tech monopolies. There's a case to be made that part of his motivation on TikTok is to, spur competition for other American tech firms, which again,
stand something up.
These are uncharted waters when it comes to presidential action in the tech space.
Well, it's only Monday, Josh Wingrove.
Exactly, it's all uncharted, my man. All right, Josh Wingrove, White House correspondent for Bloomberg. Thank you so much, and thanks for talking TikTok, because we know you've been all over that, to say the least, and much more to come when we think about the week in Washington. By Saturday, we may indeed have a nominee for that vacant seat on the Supreme Court. Let's head down to Washington now, and Nancy Lyons. Hey, Nancy.
Hey, Jason. Well, the body of Supreme Court Justice Ruth Bader Ginsburg will lie in repose this week at the Supreme Court. The public will be able to pay its respects Wednesday and Thursday, when Ginsburg's casket will be placed in front of the Supreme Court building, a precaution due to COVID-19. House Speaker Nancy Pelosi says Ginsburg's body will lie in state inside Statuary Hall in the Capitol on Friday. A private ceremony is set for this Wednesday. President Trump says he'll name a replacement for the late Justice Ginsburg by the end of this week. Bloomberg's Amy Morris takes a look at some of the possibilities.
Appeals Court judges Amy Coney Barrett and Barbara Lagoa are emerging as the most likely choices. President Trump tells Fox News he wanted to wait until services for Ruth Bader Ginsburg are concluded before naming her replacement. But he does want the new justice confirmed before the November election. Doing this so close to the election has sparked an outcry among Democrats. In Washington, I'm Amy Morris, Bloomberg Radio.
Attorney General Bill Barr is announcing more than $100 million in federal grants to help combat human trafficking in the U.S. Speaking at a roundtable today in Atlanta, Barr said the funding would help law enforcement officers and support services for victims.
Aside from financial support, the Justice Department will continue to use the full force of the law and our enforcement resources to investigate, prosecute, and punish the people behind this. criminal scourge.
Barr calls it one of the top enforcement priorities of the Justice Department. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Nancy, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. So the Emmys, I watch some of them. I watch more of the highlights just because I don't watch that much live TV if it's not sports.
Yeah.
At this point. But a lot of shows that I watch, candidly, getting celebrated.
You must have been. I was thinking about you. I'm like, this is like the Jason Kelly Emmy Awards.
Oh my God. I mean, Schitt's Creek, if you haven't seen that show, an unbelievable, unprecedented sweep across all of it.
This is the last season, right? They're done.
They're done. And it is a just delightful show.
30
it's so
awards.
Sweet. 30 awards for HBO they got. And
most of any network.
Succession also in there. So there was a little bit of a family theme, some function, some dysfunction.
Yeah.
Succession, I know, a show that you and I have talked about.
Yes.
Riveting drama with some unanticipated comedy. But the show itself, Jimmy Kimmel hosting, I thought he did a great job with all of the different things coming in. And it was a lot of fun. It's a lot of fun. And I think well-deserved across the board.
But it's just amazing, and it's just kind of a confirmation of all of these streaming services, right, or cable service. It's not your traditional television anymore.
It's not. Although
it hasn't been for a while. But
well, exactly. And I think that's the point, is that people had basically said, well, maybe we're going to write off HBO post-Game of Thrones, but here comes Succession.
Yeah.
I mean, Pop TV is not something that basically anyone had ever heard of. Sorry. But that's where Schitt's Creek ended up. I mean, we had heard of Eugene Levy and his son, and obviously Catherine O'Hara. Eugene Levy and Catherine O'Hara. It's such a great, decades-long comedic partnership that they have. And I cannot recommend that show enough, honestly.
Netflix set a record for the most nominations of any network, but they struck out again in its pursuit of the two top awards, or in pursuit of the top awards.
Right.
So we've been talking to a lot of folks at Netflix with some of their content. Man, these are the guys though that are spending big time.
They are. And look, when we look to next year, does a show like Away probably grab some nominations and maybe some awards? You and I have been watching it. It's pretty great. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we're seeing a lot of risk being taken off the table today. Right now, the S&P 500 is weaker by more than 2.5%. Energy leading this decline. The S&P 500 Energy Group is down more than 4.5%, and those stocks are tracking crude oil lower. WTI right now in the late New York session at 39.36. So we're down by more than 4% on the day. So the S&P 500 last set a record high back on September 2nd, 35.80. So we're down just about 10% from that level. 32.35 right now in the S&P. Dow Industrial Average weaker by more than 3%, and the NASDAQ comp off about 1.8%. A lot of concerns in the market today. Tighter restrictions possible given the coronavirus situation is kind of tricky in the UK. We have the financial stocks being hit after a report today. Detailed suspicious transactions at global banks, and on the list, JP Morgan, Deutsche Bank, HSBC. Airlines being very hard hit among the industrial group. The S&P airline index is down by more than 7%. We're seeing a lot of strength in the dollar right now, with the Bloomberg Dollar Spot Index rising nearly 0.8%. We've got a weaker yen, much weaker offshore Chinese currency at 6.8052 against the dollar, so we're down just about 0.5%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly here with you on a Monday afternoon from our Bloomberg Interactive Broker studio. And one of the best stories and one of the best reporters, candidly, I just love talking to him, love reading his stuff. Jeff Green, managing diversity reporter for Bloomberg. He joins us on the phone from Michigan to talk about a story. It's in the upcoming edition of the magazine. It's about Southern Bancorp, its CEO named Darren Williams. He joins me, as well as Joel Weber, the editor of Bloomberg Business Week. So, Joel, part of the equality issue, I believe, and this is a really, really important piece of the puzzle when it comes to undoing a lot of the systemic racism, candidly, going after the wealth gap and the lending gap to a large extent.
That's right. And so Darren Williams, one of finance's only black CEOs, and he's a CEO of Southern Bancorp, which Jeff is going to tell us about more in a second. What I found so interesting about this was it's like there's this void in the country, in the South in particular, where there are thousands of unbanked people. And that has obviously limited their ability to not only get capital, but also, move up in society. And that's a problem that Darren has sort of recognized, and that Southern Bancorp has moved to solve. And Jeff, talk to us about how he's going about addressing this problem.
Yeah, well, it's really interesting that the und and underbanked are about a quarter of the population, and they tend to skew heavily black, and people of color in general, but mostly black. And it's the kind of thing that's somewhat hidden, and it's a little bit intractable because these are people that banks really can't lend money to, and thus they end up going to payday lenders, which makes them even higher credit risk because they have so much debt. So what Darren and Southern were trying to do even before the pandemic was to figure out a way to sort of bridge this, to bring these people into the banking system, help them to trust the banks, give them some sense that what they're doing with the payday lenders, they're never going to gain sort of the wealth that you get. You can't get a house, you can't get a mortgage until you kind of straighten that stuff out. So, that's his big goal, is to put more people in a position to be able to have a bank account, gain credit, and ultimately have a mortgage and have something where wealth is accrued. And it was interesting because we started doing this a year ago, prior to the pandemic, and the big frustrating thing for him was it was sort of in the background. It was like you knew this was a problem, you knew it was sucking the life out of people, but it was really hard for people to sort of understand just how momentous it was. Right. And then the pandemic hits, and front and center are people dying at 3 times the rate in black communities, and it's like you start to say, wow, this is not just esoteric philosophical discussion. This is life and death, and the death is really stunning to a lot of Americans.
Well, and Jeff, I think then on top of that, in the aftermath of the killing of George Floyd and this reckoning, this long overdue reckoning around all of those issues that you described around the wealth gap, that's been brought to the fore by the likes of John Rogers over at Ariel and others. And I do wonder, how Darren Williams sees this, and sort of to your point, like this has been hiding in plain sight for a long time. He's happy for the attention, but what do we do about it? What does he say we should be doing? What is he doing to sort of help the cause?
Well, the solution that both he sees, because his bank is called the Consumer Development Financial Institution, which is sort of a specially chartered bank that is designed to try and bring money and loans and financial wherewithal to the poorest people in the country. It was something actually created by President Clinton in '94, and Southern was the model for it. Hillary Clinton was on the first version of Southern's board when it was formed, more than a quarter century ago. So it's like a long-standing. This is not a new struggle, but his idea is to use the CDFIs more effectively. In fact, Bank of America and Goldman Sachs were on a call with him and President Trump, basically saying we need to do this, we need to do more of this, and it led to a big infusion of money to the CDFIs. And that is sort of the question is, will this continue? I mean, it was in a crisis moment. The Paycheck Protection Plan was not getting to the people it needed to because the big banks didn't have the infrastructure. Meanwhile, here's Darren Williams working on the weekend with his staff, wrote 50 checks when other people hadn't even got an application yet. So that's sort of his hope, is that now people know the CDFIs are there. The big banks have kind of thrown some money their way. Netflix is involved. Google's involved. Will get this to continue so the focus stays on the CDFIs, more money is available so they can do more loans. I mean, that's the only way it works, is they need basically below market rate money that they can then lend out to keep this moving.
So, Jeff, there's 1,000 of these CDFIs out there that are in a position to help, and it's all been modeled on basically Williams and sort of in the model that they've adapted. I'm also curious what other ideas he has for how we could be helping vulnerable Americans right now.
Well, I mean, one of the key things is credit education. They were doing this. I mean, I went with them to a class in this little town site in, just off a cotton field, just, middle of nowhere, but, 20 people there learning about credit and how it works and how interest accrues and debt and all those sorts of things, basically just right at the grassroots level, trying to teach people how to get their finances in order. And then at the end of that, they would give them this 9% loan, which, keep in mind, a payday loan is around 400%, if you don't pay it off right away. So this 9% loan at the time that they would pay half of it, or half of it would be available for them to pay bills, and half of it would be held in sort of like a certificate of deposit. And that was like one of the tools. I mean, there's lots of things that he's basically saying you need to just do the block and tackling in the communities to keep this going. And a lot of the big banks have pulled out. And he's like, great, you don't want to deal with it. Give me more money so that I can deal with it, so I can get the money to the people that need it. I can focus on the hardest hit communities with more effectiveness.
Right. Well, and it's interesting, and I highly recommend people read this story, because there's an aspect of this, and you alluded to this, Jeff, around the payday lenders, that's a really important piece to understand. The delta in the interest rates there is massive and game-changing in a lot of ways. It's a terrific piece of reporting, as always, from Jeff Green, managing diversity reporter for Bloomberg. He joined me on the phone from Michigan. Check out that story in the upcoming issue of Bloomberg Business Week. You can read it now on the Bloomberg and at Bloomberg.com. My thanks as well to Joel Weber, the editor of Bloomberg Business Week. He joined from Massachusetts. Well, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues right here. If you're listening on 106.1 in Boston, Bay State Business, that's coming up next. Coming up next here, we're going to talk about TikTok from the perspective of China. Our expert, Andy Brown, weighing in. Much more to come. This is Bloomberg Business Week.
From Bloomberg World Headquarters in New York, I'm Doug Krisner. 3 p.m. on Wall Street. We have an hour remaining in the first trading day of the week. Quite a bit of risk being taken off the table today, with the S&P 500 now lower by 2.2%. Energy stocks tracking the price of crude oil to the downside. WTI in the extended New York session is weaker by more than 4% right now at 39.40. A lot of concerns in the marketplace. Possibility of tighter restrictions when it comes to the coronavirus, and financials today being hard hit. This is after a report from the International Consortium of Investigative Journalists detailed suspicious trading transactions at global banks. The report indicating that several of the big banks kept profiting from powerful and dangerous players over the past 2 decades, even after the U.S. imposed penalties on these financial institutions. Right now, the S&P Financials Index down by more than 3.5%. So the S&P last set a record high on September 2nd, and since that time we are down just about 10%. Dow Industrial Average weaker by nearly 2.8%, and in the NASDAQ market, the composite index is weaker by about 1.3%. A lot of problems developing where it comes to TikTok and its U.S. partner Oracle. Shares in Oracle right now being actively traded. The stock is right now holding on to a very slim gain of about 0.8%. We'll unpack this story in greater detail coming up here on Bloomberg. In the bond market right now, 10-year Treasury down more than 2 basis points in yield. We are quoted at 66 basis points. The dollar, meantime, strong against the majors, with the Bloomberg Dollar Spot Index rising 0.7%. We do have a weaker yen and a weaker offshore Chinese currency. The yen right now at 104.77. The yuan 6.8052 against the dollar. All right, just to recap, Dow weaker by 2.6%, S&P 500 down more than 2%, and the NASDAQ comp weaker by about 1.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week, kicking off the 3 p.m. Wall Street time hour. Let's do a little Business Week economics if we can. Andy Brown is with us, editorial director for Bloomberg New Economy, joining us on the phone from New Hampshire, picking up where Doug Krisner just left off. When it comes to TikTok, man, this deal, and we've talked about it before, Andy, is just head-spinning, head-scratching, however you want to put it. It's nothing like we've ever seen before, and it ain't over when it comes to getting done. What's the most important thing we need to understand about this? Because as I look at it, at least, and I think you may agree, it's kind of a mess.
It is a complete debacle and has been really right from the very beginning. And stuck in the middle of this U.S.-China geopolitical tug of war is a company and investors that are desperately trying to figure a way out. On the one hand, this is TikTok and its parent ByteDance. On the one hand, they've got the Chinese government, which essentially looks at what's happening as a politically inspired smash and grab raid by the Trump administration. And on the other hand, by the Trump administration, which is using the TikTok issue and WeChat as a chip or as a bargaining chip in domestic politics, essentially beating up on China as a vote-getting ploy. And so they've been twisting this way and that way, and it now looks like this deal that they stitched together, which, by the way, gets Trump almost nothing of what he wanted in the first place out of it. And even that deal now looks shaky. It's not at all sure that the Chinese side are going to sign off on it or whether Trump himself is satisfied with it.
And so, knowing the intricacies of the governments and that nexus between the national governments and the national champions, as it were, both of which I think you can argue you have on either side here, what went wrong? Was this just sort of too hard, too fast, or was everybody not on board to begin with? Like, what do you make of it, again, especially knowing some of the nuances of how each side interacts with the other?
Well, it's just the whole deal is unprecedented. We've never had a company caught up in this way before, with kind of M&A being dictated literally out of the Oval Office. So it's incredibly difficult. There are so many constituencies that need to be satisfied. And in the end, it looks like nobody is going to. I mean, so Trump came into this. He said, "Look, I got three things. Number one, this TikTok has got to be owned by a U.S. company. Number two, we have to make the data secure, and so that it doesn't fall into the hands of the Chinese Communist Party, and they have all this personal data on the U.S. population. And three, we want to have a big chunk of change. They're going to make a big payment to the U.S. Treasury." Well, actually, even under this new deal, 80% of the company after the IPO, if it IPOs, is still going to be owned by ByteDance. The algorithms are going to be open to inspection by Oracle, the trusted technology partner, but they won't, in that sense, sort of belong to any U.S. entity. ByteDance has them. And as for this $5 billion payment that Trump talks about, it turns out that this is kind of tax that they were going to be paying anyway to the U.S. government, and there's some sort of vague, nebulous promise that they'll come up with some kind of patriotic education program, whatever that may mean for U.S. kids. So he's got actually very little of what he pushed for. So if your concern was national security, this deal doesn't really do it for you.
And so as you widen the aperture a little bit and think about this from the context of ongoing tensions, ongoing negotiations around trade and the broader relationship between the U.S. and China, what does this tell you?
You know, if you're a Chinese company and you're thinking about making an investment in the U.S., you're thinking strategically indeed about your global position, or if you're an American company now and you're thinking about, the China market and how you should be positioned there, this should really worry you because it has been so unpredictable. I mean, we're in uncharted territory. There are no real rules, at least under the old system, the CFIUS system, this sort of the screening process. It was somewhat predictable. You knew what you were getting into. A lot of deals didn't get done because companies thought to themselves, well, it's not going to get through the U.S. screening committee, so we won't bother. This one just came right out of left field and surprised everybody.
And so on the other side, if you're a U.S. tech company, what do you think about this?
Well, and actually it's not just tech. Right now there's a lot of talk about an entities list. So the Chinese could actually come up with a list of companies that could be subject to retribution, not necessarily U.S. companies. So that could include tech companies, but banks, trading companies. China hasn't retaliated so far because it really needs foreign investment. It needs foreign technology. But pushed far enough, they actually could start to take action against U.S. companies, international companies in China.
Wow. All right. Andy Brown, thank you so much. Andy Brown, of course, is the editorial director for Bloomberg New Economy. He has been breaking down this deal, trying to make sense of it alongside the rest of us. I have to say, this is something we've watched incredibly closely. We've had a global team working on it from all angles, corporate, deal-making, political, international. It has touched all boxes and continues to evolve and change. And this week seems like it will be a big week when it comes to that deal happening or not happening. And obviously a lot of it just comes down to the President of the United States and what he decides to do when it comes to TikTok. Our thanks to Andy Brown. Coming up, we're going to talk about the virus, the latest there. Yep, we're still in the midst of a global health crisis. And later on, talk a little private equity with the head of private equity at KKR. He's got a new take on equity, sharing it among the workers and what that means going forward, taking care of lots of different stakeholders. That's all coming up. In the meantime, let's get to Nancy Lyons in D.C. Hey, Nancy.
Hey, Jason. Well, the Trump administration is breaking with other members of the UN Security Council and is declaring the re-imposition of sanctions against Iran.
The president's executive order announced today gives us a new and powerful tool to enforce the UN arms embargo and hold those who seek to evade UN sanctions accountable.
Today's announcement comes after the administration failed to extend the conventional weapons embargo set to expire next month under the Iran nuclear deal. Justice Ruth Bader Ginsburg's body will lie in repose at the Supreme Court building this Wednesday and Thursday. A private ceremony will take place in the Great Hall early Wednesday, attended by Justice Ginsburg's family, close friends, and members of the court. Then on Friday, her casket will lie in state at the U.S. Capitol. Betsy West directed and produced the documentary on Ginsburg's life, RBG, and told Bloomberg's David Weston that while she leaves a legacy for so many, she was living a legacy to her mother.
Ruth Bader Ginsburg was so proud of her mother. She used to say, you know, what's the difference between a bookkeeper and a Supreme Court justice? One generation. I mean, she felt, you know, that she was carrying on what her mother could have done.
Parts of Texas and Louisiana are bracing for flooding and damaging storm surge as Tropical Storm Beta slowly works its way into the part of the country that's already been drenched and battered during a busy hurricane season. The U.S. National Hurricane Center says Beta could bring up to 15 inches of rain and up to 5 feet of storm surge in some coastal communities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Nancy, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Doug Krisner.
Yeah, I'm here.
I'm so excited to chit-chat with you. You know, I listened to all your wisdom about what's going on in the markets. Quite a day. Before we get to the story that we want to talk about, it's quite a day.
Yeah, it
Just
really
watching the
is.
numbers.
It
Yikes.
really is. You know, and we've talked about some of the fundamentals underneath the hood, the coronavirus, the report on these financial institutions that may have been up to no good. But you got to wonder, too, the death of Justice Ginsburg over the weekend and how it may have affected psychology as the market begins to deal with the calculus that's involved around the election. You know, I think that's got to be at the margins, don't you?
I absolutely agree with you. And I think, you know, I was reminded, you know, it's very helpful, the campaign update that Bloomberg has going as sort of a rolling story every day, you know, reminds you how many days there are to go. It's only 43 days.
Yeah.
I mean, that is a snap.
You know, and I was listening to your conversation around the TikTok deal and what a muddy affair this is. One of the things I want to point out, too, is from the Chinese side particularly, given a lot of the sanctions that have been in place where high tech is concerned, the semiconductor story is a huge one. And you'll remember the NVIDIA deal with ARM. Beijing needs to sign off on that deal. So I'm sure there are a lot of things happening in the shadows away from the conversation around TikTok. And just, it's going to be very interesting to see how all of these pieces kind of line up the closer we get to the election.
Well, and do you get a sense from your Daybreak Asia work, I'm diverging from the script here, but that this is viewed on the Chinese side and the Asia side with as much sort of perplexion, if that's a word, as it is on the U.S. side, the TikTok deal, that is?
Yeah, I think particularly when it comes to the algorithm itself, you know, that's a real plume here. And I think that where American technology is concerned, we are a little bit behind the curve on artificial intelligence, and I think China would like to keep it that way.
Yeah. Yeah, I mean, clearly a story that we're going to continue to follow. I know you're going to be following it. We're going to be hearing from you a lot more in this show, but also on Daybreak Asia. Doug Krisner, thank you so much.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
With about 42 minutes left in today's trading day, we are now off session lows, but there's a lot of weakness in U.S. equities. The S&P 500 down about 1.8% right now, and in the NASDAQ market, the composite index is weaker by about 0.9%. We're seeing weakness today, broadly speaking, among materials and industrial shares. Energy stocks tracking the price of crude oil lower. WTI now in the extended New York session down about 3.7%. We're trading 39.60. And to get back to the equity trade, Dow Industrial Average right now weaker by about 2.3%. A lot of concerns here, and there was a report early in the day that really took the rug out from underneath the financial stocks. This is an investigation from the International Consortium of Investigative Journalists. It detailed suspicious transactions from a number of global banks, indicating that they kept profiting from powerful and dangerous players over 2 decades, even after the U.S. imposed penalties on these firms. So the S&P Financials Index right now weaker by just about 3%. Long-term interest rates coming in, 10-year Treasury, 67 basis points in yield, and we have some dollar strength today with the Bloomberg Dollar Spot Index up 0.6%, and that has produced a weaker yen and a weaker offshore Chinese currency. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thanks so much. You are listening to Bloomberg Business Week. Well, let's get an update on the virus, how it is spreading, what we may need to be worried about. Weather's getting a little cooler here in New York City, at least, and that's where we find Emma Court, healthcare reporter for Bloomberg. So, Emma, I guess I'll just start by saying, starting in the U.S., where are we in this outbreak?
Hi, thanks for having me, and I appreciate the very seasonal introduction. We're in the U.S. right now. We're reaching about 200,000 deaths from the novel coronavirus, and it's a grim milestone. It's a dark milestone. It also sets the U.S. apart on the world stage. The U.S. has about 4% of the world's population, but accounts for about 21% of global coronavirus deaths. And all the public health experts I've spoken to said, this figure really underscores, the sort of stunning inability that the U.S. has had to contain this virus. We're also at a bit of a turning point for the U.S. outbreak after seeing the virus sort of blaze through New York and New Jersey earlier this year, and then this summer have these, big hot spots in southern and southwestern states like Texas, Arizona, Florida, California. Now we're seeing the burden of the virus shifting a bit more to the Midwest, and it's hard to know right now whether we're going to see the virus kind of continue its path, whether we'll see cases, decline, whether the virus will accelerate in the fall, or whether it'll keep kind of plateauing the way we've been seeing now.
Right.
There's a lot of fears about the fall ahead.
Right. All right. So that's exactly where I wanted to go next. As we get into the fall, there is this sense of at least we've learned something maybe about how to treat this virus. I was talking to a friend on the phone earlier, catching up, and she was saying that, part of her approach, and I think a lot of people's approach is, if it's unfortunately inevitable that you're going to be exposed to it in some form or fashion, make it as late in this process as possible, as science essentially catches up, right, and sort of figures out how to deal with it as hospitalizations go down. What have we learned about how to treat it at this point?
Yeah, you raise a really important point, which is that we know a lot more about the coronavirus right now, not just how to prevent its spread, but also how to treat it, and doctors are putting that knowledge to good use in the hospital. And we're seeing them develop more effective, methods of, handling patients in the hospital, but also, having more therapeutics at their disposal in terms of, when you have these very severely ill patients. And hopefully patients also fare better when hospitals aren't overwhelmed, right? So we've seen that be an improvement as well, as these, severe cases have gone down. But, I think something I would point out, as a counterpoint to this, is that we are only beginning to learn, about people who survived COVID-19 and the long-lasting effects that they're having. And, I've done some reporting about that, and it's scary stuff. This is not trifling stuff, and we don't really know with only about, 8 months or 10 months of experience with this virus, how these things will last in the long term. So, it's really good news for people who do get exposed later in the game. Doctors have a lot more at their disposal to treat them, but, it's not, I would caution people against saying, well, hopefully I'll just have a mild case. These mild cases are very serious for the people experiencing them. And, hopefully I'll survive if I do end up in the hospital. It's not the end of the road, unfortunately.
Yeah, absolutely. As we look around the world, we are seeing some different outbreaks and some different government reactions. The UK, I believe we're going to have Prime Minister Boris Johnson address Parliament tomorrow to talk about what's going on in that country. What are we learning from the rest of the world? Because there have been places where we've been able to, at least theoretically, take some lessons here.
Yeah, and that's, I think, a really important point is even though the U.S. has sort of stood out on the world stage in terms of the amount of deaths from the new coronavirus, we are seeing other countries struggle with this as well and facing some of the same old trade-offs about reopening the economy versus, preventing the virus from spreading. And we're going to hear from the UK soon about what the next steps they've decided to take. They're seeing rise in cases. I think it's about 50,000 new cases a day that they're on course for, and that's something that, concerns officials there. And we may hear about some new lockdowns in Europe, and it's something that's, really causing European stocks to fall. So,
only about 30 seconds left here, Emma. What do we know about kind of who is continuing to be affected by this virus here in the United States?
Yeah, it's an important point as well, the changing demographics of this virus. So we have seen, and again, the U.S. data is really not in the shape you would like it to be, and experts say we don't have as clear a picture on even how the virus is changing and who it's affecting is changing because we just don't have those data capabilities. But we do know ever since the summer that the virus has been skewing younger, which means we're doing a better job, hopefully, of protecting those elderly individuals in nursing homes. But we know that, younger people hopefully have milder cases and are hopefully going to fare better with the virus, and so fewer deaths, basically.
Right. All right, a comprehensive conversation. I really appreciate it. Emma Court, healthcare reporter for Bloomberg. She is on the COVID beat doing some fantastic work. Check her out on the Bloomberg. She joined us from here in New York City. Coming up into the world of private equity, this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com. The Bloomberg Business app and at Bloomberg Quick Take. This is Bloomberg. 24 hours a day. 7 days a week. 365 days a year. Bloomberg. Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we are going to talk a little private equity. We're going to have Dave Wilson's chart of the day, and we're going to get you to the close of trading. It's been an ugly day in the markets, to say the least. The big indices all wrestling with a lot of crosswinds. Let's get some details from Doug Krisner. Hey, Doug.
Hey, Jason, you're absolutely right about that, particularly where energy is concerned. Many of the big energy stocks following the price of crude oil lower. WTI now in the extended session at $39.53. Generally speaking, in a number of asset classes, we're just seeing a risk-off trade. Having said that, the S&P 500 is off the session lows. We're down about 1.8% right now. In addition to the weakness in energy, many of the airline stocks are down today. The S&P airline group weaker by about 7.5%. Incidentally, the industry overall is bleeding about $230 million a day. Financials being hit. This is after a report detailed suspicions of transactions at global banks that may have been moving against U.S.-imposed penalties on financial firms. The indication was that these banks kept profiting from powerful and dangerous players. Right now, the Dow weaker by about 2.4%. NASDAQ Composite, meantime, weaker by about 0.9%. Long-term interest rates down today, 10-year Treasury yielding 67 basis points. We have some dollar strength, too, with the Bloomberg Dollar Spot Index rising 0.6%. That gives us a weaker yen and a weaker offshore Chinese yuan. I'm Doug Krisner. That's the Bloomberg Business Flash.
All right, Doug, thank you so much. And welcome to our Bloomberg television audience as well. Happy to welcome to this program Pete Stavros. He's co-head of Americas for private equity for KKR. Heard of it. It's one of the best-known private equity firms, and it's a firm that has been talking a lot over the past few years about its various stakeholders, and that includes employees at a time when we're more and more concerned about all of the constituencies involved in a company. Pete, you've got some news today to share with us about what you're doing with some of your portfolio companies. First, welcome. Tell us what's going on at Ingersoll Rand.
Thanks for having me, Jason. So today we celebrated a $150 million equity award to non-members of management. So these are mostly hourly employees who work in our factories and our distribution centers and earn an hourly wage. This is on top of a $100 million grant we did at our IPO in 2017, which, because the stock has performed so well, is now worth about $170, $180 million. So you add both those up, it's more than $300 million of equity in the hands of hourly workers. And so very meaningful financially. And, you know, we've got lots of kind of personal stories we've been able to hear firsthand in terms of what it's meant for them. And then just as importantly, in terms of outcomes for companies and for our investors, you know, we see higher employee engagement, better returns, better results, and better outcomes for our investors.
Well, and let's talk about the personal side of this. And I'm going to start with you, because part of the genesis of this, I think, is your own history and sort of growing up and understanding the industrial landscape, not just as now an investor, but as a kid from your dad.
Yeah, that's right. My dad was a construction worker. He operated a road grader for his whole career in Chicago, earned an hourly wage. And, you know, I just saw firsthand the lack of incentive alignment. And if you think about it, if you're an hourly employee, really all you care about are getting more hours. So that can be at the expense of efficiency. I mean, if you're too efficient, you may work fewer hours and earn less money. And there was just constant conflict around hours. And my dad always dreamt about, you know, shared ownership or profit sharing at his construction company with his union. And it, you know, unfortunately never happened, but that certainly really stuck with me. And then as a graduate student, you know, years later, this is now still 20 years ago, but as a young adult in graduate school, you get a lot of flexibility to study what interests you. And I had an opportunity to study broad-based ownership for my second year in business school. And that was a hot topic in the 1970s around ESOPs. It really kind of cooled, and I was interested to learn why it interest dissipated? Could it still be relevant today? Could it be relevant to private equity? And then when I joined KKR back in '05 and was fortunate enough to step into a leadership position running industrials, that was when I was able to kind of first put these ideas into action.
And it's fascinating, too, because this, and I'm just going to say it out loud, this cuts against, candidly, the public profile of private equity in many ways that tends to enrich a few and not think about the rest in many ways. So I do wonder what the conversations are like as you engage companies around this. Are they looking at you like, I don't know about this?
Yeah, we do encounter some skepticism, maybe even some cynicism. Some of our companies we are buying from other private equity firms, and so we do get a little bit of, hey, I've been around the block, I've seen this before, and I just don't believe that we're going to share an ownership and you're going to do all these things you're telling us around investing in the facilities and investing in employees. So there is some, you've got some wood to chop at the outset. We overcome it by bringing in CEOs from companies that have run businesses for us before and telling them that this is real. We really mean it. We also do a lot to make that ownership feel real. So we print physical stock certificates often. We will open up Fidelity accounts for people, even though the stock of their company might be private and not publicly traded. We do, as our valuations internally change for that company, we flow it through Fidelity, and then they see value being created in their portfolio. So, but I have to say, even public companies, Ingersoll Rand, the predecessor company, Gardner Denver, when we took it, it was a public company in 2013, 6,000 employees, 86 people had ownership, which is very typical. 1% to 2% of a company typically takes up all the ownership. And so, even in public companies, we do come up against the skepticism you're talking about.
And so talk about other elements of this, because obviously the financial element is super important, but one of the things that we're increasingly talking about, we talked about it earlier on today, and it's part of the Business Week issue this week, is not just about shared ownership, but basically sort of a holistic view of someone's finances and creating wealth. And I believe you've done some work with Operation Hope. John Hope Bryant, has been a guest on this program. Tell me a little bit more about what you're doing there.
You're right. It does have to be broader than just ownership, because if it's just ownership and you just hand out the ownership and that's the end of the conversation, that's just compensation. And if what you're after is a better employee experience, more engaged employees, and better ultimate performance in the company, you've got to be broader than that. So even as it relates to ownership, the CEOs who do this well, and our CEO of Ingersoll Rand is exceptionally good at this, Vicente Reynal, you've got to treat people like owners. So you've got to share the business plan, share the vision. Where are we headed? How are we going to get there? Is everyone going to participate in the upside, assuming we achieve our plans? But then beyond ownership, we do things around investing in the workforce, improving the work environment, which starts with the basics like employee safety, but also we've extended to, we brought in healthier food options to our manufacturing plants. Right now we're building an on-site medical clinic at one of our facilities because the employees have complained about having to drive so far for, basic medical care. You mentioned John Bryant. We work closely with Operation Hope to do personal financial training. I mean, if you're going to give out ownership and have people really have a shot at wealth creation, they're going to have to understand what, get some basic training on what to do with it. And that ranges from debt repayment to understanding the earned income tax credit to, how to invest money, once they have some wealth. So the last part, by the way, is our companies also, I think, do a nice job of engaging with the community.
Right.
And this is all about building pride in the organization, showing employees, hey, this is about more than just making money. And so we've struck a number of really exciting partnerships with nonprofits as well.
So, Pete, I would be journalistically negligent if I didn't ask you about the broader private equity world. You guys at KKR have been exceedingly busy, I think it's fair to say, putting a lot of money to work, doing a lot of deals during a time when the world is, to say the least, topsy-turvy. What are you seeing out there now 6 months into a work-from-home environment where the economy remains a little bit uncertain, the stock market remains pretty resilient, today notwithstanding? What are you seeing out there?
Yeah, to our investors, and we're proud of having been able to accomplish both during this COVID period of time. In terms of what we're seeing right now, in the economy itself, it's as you would expect. There are some things doing well. Some aspects of retail are actually surprisingly doing quite well. Anything around housing, if you look at the exodus from urban areas to suburban areas, low interest rates, strong housing prices, anything touching that, building products, et cetera, doing really well. Anything around travel, leisure, aerospace, people making manufacturing aerospace components, obviously a much tougher environment. In terms of what we're looking for either secular trends and themes we really believe in, health and wellness, e-commerce, et cetera, or areas that are really in the crosshairs of COVID, that if you've got a 10-year horizon, there's a lot of growth from here. Might not recover all the way back, but there's a lot of growth from here. So things like, we invested in U.S. Foods, great business that serves restaurants as a distributor. That's something that with the fullness of time is going to come back.
And so as you look at the end of this year and into 21, what's the biggest challenge for you as an investor?
The biggest challenge, I would say, is just the lack of visibility. Yeah. I mean, everything is changing so quickly, and there's so much going on between, you've got a potential spike in COVID coming, this fall. You've got the election. You've got trade issues with China. I mean, there's just a little bit. It's coming at you so fast, it can be hard to separate the signal from the noise. I would say that's the biggest issue an investor's got, is the amount coming at you is a little bit, unprecedented.
And more to come on this program where equity continues to go deeper into the organizations you own?
Definitely. This is something we're continuing to expand, experiment with, try and constantly improve. We understand that this is not a perfect fit for every sector. If you take retail as an example, average employee turnover is 100% a year. If you walk in and start talking about a 5-year business plan, that's not going to be effective. So yes, this is here to stay for us. We are going to be expanding it and continuing to experiment with it. But again, we understand that it's not going to be right for every situation.
All right, Pete Stavros, really good to catch up with you, co-head of America's Private Equity for KKR, a novel solution to spreading the compensation and the ownership throughout the economy. My thanks to him. This is Bloomberg. Wow, Dave Wilson coming in hot on a Monday.
I blame the rock and roll fantasy camp for that.
Did you go to rock and roll fantasy camp over the weekend and decide to just do a hair metal sort of situation?
I did not.
Oh, come on, Dave. You're among friends. You could share with us.
I am having a hard time pinning down which band, though. It's not Motley Crue, is it?
It is Motley Crue.
Ooh,
you doubted yourself, Jason.
There we go.
Maybe Jason went to rock and roll fantasy camp over the weekend. I think so,
Who's
too.
to say?
Who's to say? So, okay.
How does that play into your chart of the day, Dave?
I mean, when you're talking about home builders, you've got to take a song with home in the title, don't you think?
Totally.
Home Sweet Home.
There you go.
That's the song. In any case, what I did with the latest chart is, just do sort of a basic comparison. And, it's one that you could argue kind of shows up today when you look at the shares of Toll Brothers. I mean, they came out and talked about how the first half of their current fiscal quarter, their contracts that were signed more than doubled from a year ago. So you've got those shares higher. And then the question is, wait a minute, we're in the middle of a pandemic. We either have a recession going on now or have been through one. How the heck can these shares be doing so well? And a big reason, it would seem, just based on today's chart, is what's going on with mortgage rates. I mean, we've seen the 30-year fixed rate on average, as compiled by Freddie Mac, go below 3%. It set a record the week before last. It was just above that record last week at 2.87%. And so it kind of tracks pretty nicely with the year-to-date performance of the S&P 1500 Home Building Index. So that includes the bigger builders in the S&P 500 and the smaller ones in the mid-cap 400 and small-cap 600. You put it all together as of Friday, the industry index was up about 27%, and it is what they call a level 4 index group. So it's the most, kind of fine definition of industries within the S&P 500. So there are 147 of these industries, and the group was 11. It just fell out of the top 10 literally at the closing bell on Friday. So, it just goes to show you that even though this group took quite the hit, along with a whole lot of other stocks in February and March, lower mortgage rates kind of provided some support for the industry. And so, you look at the shares, they've rebounded with a vengeance. This index is more than double from its low in March and has been setting records along the way. And, mortgage rates are a big reason why, or at least that's what it would seem. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
That's impressive, though, in terms of home builders, what they've done this year.
Oh, I thought you meant impressive about Motley Crue.
That, too.
They still got it.
They
could show up at Rock and Roll Fantasy Camp big time.
Are you kidding?
That
Can
would
you
be
imagine that class, that master class?
Totally.
It's like, can I get in? Can I get
Hey,
in?
bro,
Standing
get
room
in.
only, virtually.
People telling stories about seeing him at Nassau Coliseum. I'm not naming names. Anyway, all right, Dave Wilson, thank you so much. We'll talk
Thank
to you
you,
right
David.
after the close of Trading for Your Stock of the Day. Let's get, in the meantime, to Doug Krisner. Hey, Doug.
Hey, Jason. So we've got about 12 minutes now until the closing bell. Very much a risk-off day. On the positive side, we are off session lows. A lot of concerns for the market. There's this issue of tighter coronavirus restrictions. Look at what's happening in the UK. Prime Minister Johnson is going to convene crisis talks tomorrow about tackling a resurgence in infections there. His top economic, or rather scientific advisor warning the UK is on course for 50,000 new cases a day by mid-October without urgent action. And then here in the States, there's this issue of the confirmation process for a new Supreme Court justice. Question being, how's that going to influence negotiations on another round of stimulus? On top of that, financial shares being hit today after a report detailed suspicious transactions by a couple of global banks. Dow Industrial Average right now weaker by about 2.3%. S&P 500 down 1.6%. NASDAQ comp falling just about 0.6%. We have a drop in long-term interest rates today. 10-year Treasury right now with a yield of 67 basis points. We've got a drop in crude oil, 39.50 WTI in the extended session. Many of the energy stocks following that in sympathy to the downside. And then we have a stronger dollar with the Bloomberg Dollar Spot Index pushing up 0.6%. Flip side gives us a weaker Japanese yen and a weaker offshore Chinese yuan. I'm Doug Krisner. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It is time for the drive to the close. With us is Dave Donavidi, and he is Chief Investment Officer of CIBC Private Wealth Management, roughly $74 billion in assets under management, on the phone from Baltimore. Hey, Dave, nice to have you here with Jason and myself. How do you explain the selling today? How do you see it?
Well, I'll tell you, it brings back bad memories from the COVID bear market of February and March, not just because the market's down, but we've got about maybe 10% of the stocks in the S&P 500 are up, and it's the old stay-at-home stocks. It's e-commerce, it's comfort foods, at-home entertainment, video gaming, even testing labs. That's about all that's up. And if you look at what's kind of getting crushed today, it's airlines, casinos, cruise lines. It's again, rings very familiar to the dark days of February and March. And so some of that obviously emanates from the concerns coming out of Europe about a resurgence of COVID-19 and the notion that maybe again what hits there first will come here next.
Right, a reminder we're not out of the woods yet. But having said that, we are off our lows of the session. Are investors still out there thinking, okay, when there's a pullback, it's an opportunity for me to get in?
I do think that there is definitely a significant, buy the dip constituency out there, and the support behind that is liquidity, right? There's the usual wall of worry in the market. What to worry about, like COVID and the economy and so on. But the onslaught of liquidity provided by the Federal Reserve and other central banks is kind of a constant reason to want to look to buy the dips.
And so when you think about the election, it's 43 days away, as we keep reminding people today, and we'll probably remind people as it gets to 42 and all the way down. How much does that figure into your calculus here, and how much pause does it give you in terms of making any big moves, Dave?
Yeah, I think that maybe the most important investor trait when you're considering marrying election implications to the market may be humility, simply because it is so difficult to forecast all the variables correctly. Who's going to win the White House? Who's going to control the Senate? What will the immediate market reaction be? Which sectors will be, kind of winners and losers? Threading that needle is extremely difficult. So we tend not to do a lot of positioning around election results. I will say, though, that the interplay between this Supreme Court battle and the election, I think, does ramp up the potential volatility here. And that's because I think that the fight over this Supreme Court seat is going to suck all the air out of Washington for the rest of the year. And I think it's now very unlikely that we see a significant fiscal support package.
Yeah.
It's just been pushed to the side. And that is, in the short term anyway, somewhat troubling to me, because I think the economy needs some of that to sustain its momentum through the fourth quarter.
Yeah, I mean, it's interesting. Every economist we talk to, it's not a matter of like, well, maybe you can make an argument against it. Just about every economist will tell you something more needs to happen. And I think we also worry, as you said at the top of the conversation, about a second wave. And if we see, furloughs or layoffs or a slowdown in spending, that's only going to become more pressing.
Yeah, I think that's right. There's still an incredible amount of impairment in the economy. You just look at the number of unemployed and a trend toward, the percentage of unemployed essentially being long-term unemployed instead of just furloughed. And, we have this remarkable situation now where, GDP has been clobbered, but disposable income is still up. That's all because of government support. Without that, we would still be in a recession that was getting worse as opposed to the beginning of a recovery. So this is I think going to be a bit of a high wire act for the fourth quarter.
Okay, yikes. So the potential to stay in recession, go back into recession, I don't know. What's the scenario? What are the scenarios that you guys are playing out at your office?
Well, the way I view it is we're not in recession anymore. We're in recovery, and we'll see that, kind of verified with third quarter big jump in third quarter GDP.
Right.
The question is, when can we get to expansion? How long do we have to go before we just recover what was lost from COVID-19? I think that is probably, sometime late into 2021, and if things don't go well, in the fourth quarter, we're probably looking at 2022 before we can even think about an economic expansion. And that leads me to think that some of the quick upward revisions that have been having to corporate earnings may be ahead of themselves.
Well, the Fed's already told us, right, that they're going to keep rates low. And of course that can change, but they've said low for a long time. I mean, it's just kind of more of what we've had, post-financial crisis, but it just potentially continues for even longer.
Yeah, I think that's right. I mean, you can't ask too much more of the Fed in terms of clarity over not just the months, but the years. But I think there was the assumption that there would be some fiscal support along the way here, and that's what's really come into question now.
Well, it seems like there was that assumption from Jay Powell and his pals. So, they've been sort of saying it, whether it's in his testimony or whether it's in his statements or his statements to the press and his colleagues as they've talked to reporters and given speeches, et cetera. All right, Dave Donabedian, thank you so much. Chief Investment Officer for CIBC Private Wealth Management, joining us on the phone from Baltimore. Carol?
Listen, we just got about a minute left, or a couple of minutes left here in today's trading session. What's interesting is we are definitely off our lows, and I think the NASDAQ even went positive for a moment. So talk about, kind of a wild swing here and really bouncing off our lows. But nonetheless, I do wonder what happens ultimately to the economy if there isn't more stimulus, and whether or not any of the momentum that we get just comes undone, and what the implications will be. It's harder. The bounce back can always be harder, especially if there's no help.
Yeah.
Or continued help.
It's tricky. I mean, and as we look at, and we'll talk about this after the close, when we look at the year to date as it all settles out. I mean, S&P is now just barely in the green.
Yep.
And it was in much healthier shape before. And the Dow is down. So we're going to have all that ahead for you. Some movers and shakers. Dave Wilson's stock of the day. Lots more to come here on a Monday. It's Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Doug Krisner. There you have it. Sound of the closing bell for this Monday, September 21st. It looks as though the Dow will end weaker by about 1.8%. And as you just heard, off the low point of the day. A lot of risk taken off the table today, given a variety of concerns. There may be some tighter coronavirus restrictions on the table, particularly in the UK. Tomorrow, Prime Minister Johnson will convene crisis talks on tackling a resurgence in cases. His top scientific advisor warning that the UK is on course for 50,000 new cases a day by mid-October without urgent action. And then here in the States, the key question: how will the confirmation process for a new Supreme Court justice influence negotiations on another round of fiscal stimulus? And then, in addition to that, this idea that with a new justice, the potential for the court to declare the Affordable Care Act invalid. S&P 500 today weaker by about 1.2%, and the NASDAQ market, the composite index was down about just 0.1%. Of the 11 industry groups within the S&P 500, only information tech positive today. Materials, industrials, energy leading to the downside. And within the energy complex, we have a lot of the big names tracking the price of crude oil lower. WTI in the extended session weaker by more than 3.5% to 39.65. A day where the dollar rallied against the majors. Kind of an interesting development. The Bloomberg Dollar Spot Index was actually higher today by about 0.6%. That in turn has produced a weaker yen at 104.74 and a much weaker Chinese currency at 6.8052, down against the greenback by more than 0.5%. And we have long-term interest rates coming down today. The 10-year Treasury, last quoted in New York, down by more than 2 basis points in yield to 67 basis points. All right, you are caught up on markets. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Your next move will be your last.
Nobody move a muscle.
Damn, Stiffy, you got some moves.
We're now moving on from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week, Movers and Shakers with Carol Messer and Jason Kelly on Bloomberg Radio.
All right, time to take a look at some of the stocks on the move for the Monday trade. Let me do a little bit of big picture. Of course, Doug giving you the numbers, the closing numbers. We did finish off our lows for the S&P Dow and the NASDAQ. S&P 500, though, definitely a risk-off trade. 430 names in the index lower today, 75 higher. If I look at those 11 major industry groups in the S&P 500, information technology a tad higher, up about 0.6%. That was the only group. The other 10 were all down. Bottom of the pack, industrials down 3.5%. Materials also down about 3.5%. Energy was also down 3.5%. Bottom of the pack, though, are those materials names.
I mean, it's fascinating to look at the swing in the NASDAQ alone.
Oh, yeah.
I mean, it's really, as you said, it didn't quite get to positive territory, but it got close. It got real close and basically finished at its high of the day. But, I mean, it was down. So it finished at 10,778. It was down as low as 10,519.
Down 2.5% at its lows. Yeah. You're right. It didn't get green. I thought somebody tweeted. So forgive me.
No, not
I
quite.
thought it was green.
But in any case, but it just shows you. And if you look at what's interesting, the names that did do well in the S&P, your number one gainer, you and I were trying to figure this out as we were getting right to the close, PayPal.
Yeah.
And it looks like, at least according to the smart people at Bloomberg, that part of that is it's kind of a stay-at-home stock.
Yeah, exactly. I used PayPal yesterday.
There you go.
Isn't that funny? Yeah, PayPal. So as you
You're
said,
welcome, PayPal.
You're welcome. Up 4% in today's session. You're right. I mean, other gainers, and I don't know if we've got all the tickers for our folks on YouTube, but Twilio was higher, DocuSign, Shopify. These are some of the names we were looking at earlier when we kicked off the trading day over in Europe. So yeah, and we know Europe, right, and the UK. Those are where you're seeing some of the numbers. And listen, they were ahead of us in this process. So I think there is the concern that that's where we end up again. So that's why you're seeing nervousness once again in the market. I mean, listen, there are so many macro issues for people, whether it's the elections, whether it's the virus. There's just so much for folks to think about. Where you want to go?
Not surprisingly, on the other side of the equation, DAL, Delta Airlines, UAL, United Airlines, they are down among the worst performers there.
Yeah.
And that
Smackdown
again would make sense, given that if things are starting to get a little worrisome in other parts of the world and in this part of the world, people aren't going to travel.
Right, and they're already asking, right, for more assistance from the government. So we're watching that very, very closely to see what happens. I mean, this, it's a complete shutdown. And if we have to go there again, then they're going now not like they were in February or March. They're now going in a weakened state. And if they shut down again, so it becomes really problematic.
And, it was interesting. Dave Donabedian, who we were catching up with there at the Drive to the Close, part of the notes he sent over was something that we didn't really get to talk about with him, but I think is important. the bar is going to be very high for a total shutdown again. It may be necessary. We don't know. I mean, we certainly, if there's one thing we've learned, it's that we can't really predict the future at all.
Right.
And if it really flares up, that may be where we end up. But I think governments and companies are going to be quite loath to do that.
Well, and I think what's interesting is, and we've talked about New York a lot, it's why they're kind of slow and steady and taking it very carefully, because if you can kind of create a bubble and keep the virus out, it allows more of us to kind of resume
And you know what
our normal
that sort of
ways.
bubble is bad for? Airlines. Because if people aren't moving around.
Just think about, you and I talked about this, how many flights have we not taken because of this the past 6 months? I mean, think about how many.
Totally. Well, I mean, we were going over our fall calendar as a family last night and looking ahead at things. We were supposed to be in Orlando in 2 weeks for a trip.
You're not going to.
And then we were going to go to the Milken Conference, which is now going to be virtual.
Right.
In Los Angeles.
That's right.
And that was delayed twice and then ultimately put virtually. So that's the sort of thing that we're all going to be dealing with, and that has real economic effects. So,
Right, exactly.
We should do the VIX.
Let's do the VIX. And we would assume that on a day when we saw a bunch of selling, that the VIX would shoot higher.
It did. It was up 7.3%, closing at 27.71. It's Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson. Dave Wilson is back with his stock of the day. Ticker is AWR. What do you got for us, Dave?
I've got American States Water for you, Carol. It's the owner of a California utility, Golden State Water, and a smaller power provider in the state. The company also runs and maintains water-related facilities at 11 U.S. military bases nationwide under government contracts. American States traces its history back to 1929 and has been publicly traded since at least 1988. Now, American States shares, yes, that ticker AWR, have risen every year since 2011. This year, they climbed as much as 12% through mid-March when they set a record. Then the gain was lost. The stock was down 19% for the year as of Friday. American States narrowed the year-to-date loss today with help from Wells Fargo. The firm raised its rating to the equivalent of buy from hold, though its 12-month share price estimate of $79 was left intact. Wells Fargo said the stock's decline was excessive and the company is likely to prosper in the face of changes in California's rate-setting standards. You know, American States posted its biggest gain since early April, so 5.5 months, and the shares rose 6.3% on the day.
It's kind of fun to be back in the studio.
Any CEO, like any CEO, she's got a lot on her plate.
Well, and industrial, and they play into so many different markets, so great perspective and great lens that they are looking through, so can't wait to check in with her. Let's get, though, back to world and national news headlines, and for that, let's turn things over to Ed Baxter. Hey, Ed.
Hey, Carol. Hey, Jason. The partisan battle over Supreme Court justice increases the damage on already fragile talks aimed at getting a new relief/stimulus bill. The squeeze to get something done there quickly limits both time and desire to get something done. It could threaten to undermine the recovery in the economy in coming months as well. It will over timing what will sure to be contentious confirmation fight in the Senate. Some New York kids back in the classroom.
Something great is happening today in New York City. This week, 90,000 kids will go back into classrooms between 3K, pre-K, and our special ed classrooms in District 75. Next week, hundreds of thousands more.
Mayor Bill de Blasio says one of the most important things that can happen to the city. California is still trying to recover its testing capacity, slowed by the fires before returning to school.
And the timeliness of tests here in the state of California, we will have more clarity and more assurance in our capacity to move more swiftly to not only reopen different sectors of our economy more fully, but also reopen our schools.
Yeah, Governor Gavin Newsom says decrease in hospitalizations, ICU admissions over the past couple of weeks. In the fires, 64,000 structures have been damaged in the first, fifth, and seventh largest fires, burning concurrently in the state, still burning.
As we get back in and people are able to repopulate, go back into their communities, we'll determine more structure loss. By the way, that's destroyed, not damaged structures.
Yeah, 64,000 damaged structures, 26 deaths.
In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser. And listen, this is the story that really rattled the market. And were it not for a tech rally, I feel like we probably would have finished closer to the lows, that's for sure. It sort of is all spelled out in this great story in the Bloomberg. Bank shares dip, $2 trillion of suspect flows under scrutiny. WOA.
WOA is right. So it's a cache of leaked documents, and it's interesting. I guess this is where the information. So there's a new investigation by the International Consortium of Investigative Journalists. They say, you know these names, JP Morgan Chase, Deutsche Bank, and HSBC Holdings were among the global banks who, quote, kept profiting from powerful and dangerous players, end quote, in the past 2 decades, even after the U.S. imposed penalties on these financial institutions. This is like a setup for a movie. I mean, I want to know kind of what's going on. And I guess these documents really get into the transactions. Happened between 1999 and 2017.
Yeah, it's it's complicated in terms of what they did and when. But it's interesting. The investigation, it is extensive, based on more than 2,100, quote, suspicious activity reports. And these are filed by the banks with the U.S. Department of Treasury's Financial Crimes Enforcement Network. But they represent just 0.02% of more than 12 million suspicious activity reports filed between 2011 and 2017. They're dubbed the FinCEN files. 100 news organizations in 88 countries, according to BuzzFeed.
Banks moving money for people or entities they couldn't identify, and in many cases failed to file the required suspicious activity reports until years afterward. I mean, we're talking about money laundering or other criminal activity. At least allegations, I guess.
Did you see who popped up in there?
No, who popped up?
Paul Manafort. He makes a little cameo. So, interesting to see when they start pulling these threads and they start naming names and who put which money, what money where. This story is not over. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It was a risk-off Monday, but if you're going to look for a positive, we did have a rebound in tech shares today. As a matter of fact, of the 11 industry groups within the S&P 500, information tech was the only one showing a gain today. Other groups like financials, energy, materials, and industrial shares leading the way lower. The S&P 500 down today by nearly 1.2%, 3281. The Dow, for its part, was weaker by 1.8%. And in the NASDAQ market, the composite index was off just 0.1%. A lot of issues for the market to consider, including a possible resurgence in coronavirus cases. British Prime Minister Johnson will convene crisis talks on tackling a resurgent caseload tomorrow in the UK. His top scientific advisor warning that the UK is on course for 50,000 new cases a day by mid-October without urgent action. And here in the States, a key question: how is this confirmation process for a new Supreme Court justice going to influence negotiations for another round of fiscal stimulus? And on top of that, given a new justice, what's the potential for the court to declare the Affordable Care Act invalid? We had some dollar strength today with the Bloomberg Dollar Spot Index rising 0.6%. Flip side, weaker yen, weaker offshore Chinese yuan, and a 10-year Treasury yielding 66 basis points. I'm Doug Krisner. That's your Bloomberg Business Flash.
So thank you so much, Doug. Our earlier interview with Mahindra's Deputy Managing Director, Dr. Anish Shah, it really gave us a global look at the world and of many different industries. Well, our next guest also has that wide scope as well. And I actually think we're going to hear from him later. Forgive me.
You did it earlier, but we're going to hear from
that's
it later.
why.
We're
It's
in
been a
sort
long
of a
day.
wormhole of time.
We are in a wormhole. Our next guest, though, has a very wide scope when it comes to the world. They make wind turbines, power generators, industrial motors, so many different things, high-tech digital systems, and a lot more. Joining us to talk about where we are in this world is Barbara Humpton, President and CEO of Siemens USA, on the phone from Washington, D.C. Forgive me, Barbara, it's been a really long day that started about 4 a.m. this morning, so thank you for your patience. We are delighted to have you here with us, though, because you do have kind of a window into our world where you see a lot, and I think this is a really important perspective, especially when we have so little visibility. What are you seeing?
Well, yeah, thanks. First of all, it's great to be with you both, Carol and Jason. And what Siemens has been doing through this pandemic is serving society as we've been built to do. You mentioned a few of the things we're involved in, but one of the most important things was Siemens' capabilities in healthcare. Our colleagues in Siemens Healthineers have helped respond with additional testing capability, and now, most importantly, with antibody testing, so that we can understand public health as the virus continues to spread. But it goes beyond healthcare. We're engaged in helping with facilities, ensuring that there's adequate hospital beds available, standing up new facilities in record time, helping manufacturers keep supply chains flowing so that we have enough PPE to meet our needs as we go. Overall, I would tell you, Siemens is going to end up being an important partner for communities around the globe and here across the U.S. as we deal potentially with a second wave. And our goal is to help America stay open.
Potentially a second wave. I got to ask you, though, how likely are you expecting that, especially with what we're watching over in Europe right now in the UK?
Well, we know that everyone everywhere is having to pay a lot of attention to community health, and we've got tools to do that now, right? So expanded testing certainly makes a big difference, and we've also learned how to keep things open with appropriate strategies like physical distancing, et cetera. One of our businesses, Smart Infrastructure, actually has a whole program called Come Back with Confidence. We're rolling out technology into buildings to help the people who are managing those spaces keep their residents safe. And we're confident that that's going to be a major tool for us as we enter into the fall months.
So, Barbara, one of the areas that we've been very focused on is what's happening in cities, and you alluded to this. And I know that you attended, I believe, the U.S. Conference of Mayors, and I want to understand what they're saying to you, because the infrastructure that they have to maintain is critical as both a network, but also just for individual human beings. What can you tell us about what's happening on the ground as you talk to these folks who are very much on the front lines?
Yeah, Jason, we were so interested in what's happening at the city level because this pandemic is hyper local, right? It affects communities, and communities have to deal with different circumstances. So we wanted to survey mayors, and we asked the Harris poll in concert with the U.S. Conference of Mayors, and we got great feedback from 124 mayors across 34 states across the United States. And it was remarkably consistent feedback. And what mayors are saying is they expect to see declines in their budgets. We're all concerned about that, understanding the economic impact. But they're also viewing investments in infrastructure as the most positive way that they can be working in both the short term and the long term to support the economies, bring jobs back into their communities, and attend to health simultaneously.
You know, I feel like we have been talking about infrastructure for so long. Barbara, do you feel like finally something will ultimately be done? Because you know it's like one of those things that actually both sides of the aisle agree that we should be putting money into infrastructure, you know, in Washington, and yet it doesn't seem to happen. You think it's a little bit different. You are actually seeing municipalities saying, yep, we got to do stuff.
We've got to do things, Carol. And so here's what I think we're going to see. First, we've seen both campaigns at the presidential level talk about infrastructure as being central to their agendas. But more than that, this is going to take far beyond. I mean, before the pandemic, we were seeing something like a $2 trillion deficit in the kind of spending in infrastructure that would be required to. This is data from the American Society of Civil Engineers. So we knew we were working, you know, an uphill battle at that point. What's going to be necessary at this stage of the game is to mobilize capital from every sector. So I truly believe that seeing not only government action, but private sector action to be engaged in infrastructure improvement.
Well, we know, Jason, right? We talk about this a lot. There's certainly a lot of private money out there in the private sector for there's all these infrastructure funds just waiting to be put to work.
Waiting to be triggered, that's for sure. All right, Barbara Humpton, stick with us. President and CEO of Siemens USA. She's joining us on the phone. We're going to continue this conversation.
Lessons and what it's like. All right, folks, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is next. You're listening to Bloomberg Business Week. Carol Masser, Jason Kelly. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our conversation with the CEO and president of Siemens USA, Barbara Humpton.
Yes.
I want to talk to her a little bit about leadership during the pandemic because it has been a test, to say the least.
Oh my gosh, absolutely. All right, we'll get into that in just a moment. Let's get back to your top business stories. Some of the news after the closing bell. Once again, Doug Krisner.
Hey, Carol. So we've got the text now, prepared comments that Fed Chair Jay Powell is set to deliver tomorrow before the House Financial Services Committee, and the Fed chairman saying the path ahead is highly uncertain and hinges very much not only on the coronavirus but on policies as well. And I'm going to read between the lines and imagine that he's really addressing the fiscal policy issue. And that is clearly a key question today for markets, particularly in the context of the confirmation process now for a new Supreme Court justice. And how will that influence negotiations over another round of fiscal stimulus? And while we're at it, in terms of a new justice, what's the potential for the court to declare the Affordable Care Act invalid? And then when it comes to the coronavirus, in the UK, Prime Minister Johnson will convene crisis talks tomorrow on tackling a resurgence in cases. His top scientific advisor warning the UK is on course. Check this out, 50,000 new cases a day by mid-October. That's without urgent action. So there's a lot really for the market to kind of process and remain a little anxious about. I think that's a fair statement. Dow Industrial Average today weaker by 1.8%. Positive here is that we ended well off the session lows. In fact, within the S&P 500, only one of the 11 industry groups was positive: information technology. S&P today down 1.2%. NASDAQ Composite coming in with a loss of just 0.1%. Got a stronger dollar. Bloomberg Dollar Spot Index up 0.6%. Lower bond yields. 10-year Treasury last quoted at a yield of 66 basis points. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Let's get back to our conversation with Barbara Humpton, President and CEO of Siemens USA, joining us on the phone from D.C. So, Barbara, in the few minutes that we have now, I just wanted to ask you, what's this been like as a leader? I mean, you have a massive organization that you're responsible for, and I wonder, now 6 months in, this isn't triage anymore. We're having to make real decisions about how our companies are run, and I wonder how you've handled it and what you've learned.
Well, great question, Jason. And we discovered early on, because we were so essential to so many segments of the market, it was necessary for us to, basically pull our boots on and get out there and get working. When we initially got started, about 2/3 of our employees were able to work remotely, but that meant 1/3 had to be out on the front line in harm's way. And we really didn't know much back then about, what would it take to keep people safe. So safety of the business, safety of our employees just went hand in hand. And then, of course, as I shared, we were looking for ways that we could help in addressing coronavirus and the subsequent crises. And now we're looking at reinvention. The thing about Siemens is we are a company of engineers, of makers. And there's nothing better than, digging our teeth into a really hard problem. So the key thing that we needed along the way was to stay focused on what are our customers' top issues we're dealing with, and then give away power, empower people at the local level to do what needed to be done in the moment. Turns out that's a really healthy formula for success going forward. And so some things like remote working, we've announced within the last month, we're going to keep that ball rolling. We're not going back. We're actually building forward.
Well, for all of your workers, or obviously some things probably cannot be done at home, but for those that can work from home, what percentage of your workers will ultimately stay at home long term?
Well, obviously, this does really depend on roles, but on average, what we're expecting is that employees will only need to come to the office 2 or 3 days a week. Right. And what we need is to make that time in office something that's meaningful. What needs to be done in person. And we've got teams all across the country reconfiguring office space for the new way we're going to be using that space.
One thing I want to ask you, though, and Jason and I have gotten into this with a lot of the CEOs and leaders that we've talked with, is about those strategies that maybe they were going to implement in 2 years from now or 3 years from now, and then all of a sudden, because of the pandemic, they're like, nope, got to do it right now. What has changed either in your strategy or your business operations because of the pandemic, and it's here to stay? Obviously, as you said, working from home, but what else?
Well, we actually took a look at all of our markets. About the May timeframe, we asked ourselves the question, we had done a future strategy look. We called it the U.S. Agenda 2030. What will our markets look like 10 years from now? Therefore, what do we need to be doing now to be ready for that? So we published this year the COVID edition. You know, how have each of these markets been impacted? And you look across it, transportation is changing. You know, how do planes and trains need to attend to health and safety in addition to the other traveling safety they already had as priorities? Businesses everywhere are focused on cybersecurity as a hot priority for all of them. And so, you know, for every single one of these market segments, we've now said, hey, some of these changes are here to stay. Not only that, but some of these changes make us better. Manufacturing is going through a digital revolution, and yes, it got accelerated during the pandemic, and that's going to be good for everybody, because what this is going to allow is more local manufacturing, more tightening of supply chains in local regions, diversification. Not all of these changes are scary.
And Barbara, just last minute or so here, how have you, or do you plan to in the short term or in the near future, I should say, sort of reallocate resources either to, you know, investing in certain areas or investing in certain locales or regions? How dramatic have those shifts been?
Yeah, well, we've been on a strategy where we think that what's happening now is the same digitalization that came to communication and entertainment to our personal lives is now reaching our built infrastructure. So the whole idea of getting our physical world connected, using data then to help it perform better, that's the world we've been living in. And that's the nexus of the digital and the physical world. So now we're at a point where we can say to prospective employees, you can live wherever you want and have access to the top experts inside Siemens.
That's huge.
We can reach out to historically Black colleges and universities and say, you know, let's devise ways to, you know, build the talent pools of the future. I'm excited about what happens next as we move away from big centers to a more distributed workforce.
You can hear it in your voice. So great to catch up with you, Barbara. Thank you so much and for giving us so much time on this Monday afternoon. Barbara Humpton, President and Chief Executive Officer at Siemens USA, on the phone from Washington, D.C. Yeah, I mean, right, things that you thought you were going to do maybe a longer time frame, and now you're going to do it much more quickly.
I think we will look back on this. I mean, obviously, there are so many different things that we will have learned, but I think we will look back at this as sort of the great accelerant in many ways. You know,
a great way of describing
you basically just decided, all right, we got to do this now.
That could
we
be
can't
a new
wait.
book.
There you go.
There you go.
All right, let's get back to Ed Baxter out in San Francisco. He's got world national headlines.
Hey, Jason, U.S. has placed further sanctions on Iran in a presidential executive order, not waiting for the UN to act.
Our actions today are a warning that should be heard worldwide. No matter who you are, if you violate the UN arms embargo on Iran, you risk sanctions.
Secretary of State Mike Pompeo says the executive order is very powerful. House of Representatives opened today with a chaplain, Pat Conroy, remembering RBG.
May all Americans be inspired to be their best selves because of her example. May she rest in peace.
And services for most of the week starting Wednesday. President Trump says he'll announce his replacement choice by Friday or Saturday, leaving a very partisan scuffle to follow. Democratic Senator Dick Durbin asking why so rushed.
Are the Republicans so convinced that Donald Trump is going to lose that they have to fill this vacancy now? I wonder.
Yeah, Republicans say it's the president's and theirs to follow the Constitution. And Bloomberg has just moved a story up on the Bloomberg terminal saying that the president is zeroing in on Amy Coney Barrett. It does set up a bitter process that does threaten to limit any talks on new relief and economic recovery as well. Slowly, New York City schools are going back to session today, and New Jersey Governor Phil Murphy says he's seeing an increase in cases and the highest transmission levels in 7 weeks.
This pandemic isn't over, and as we know, it is all too easy for the numbers to go back up.
And he says it's up to residents to keep things safe and not have to retreat on opening. Meanwhile, the U.S. Centers for Disease Control and Prevention has removed from its website what it said was a draft guidance posted late last week stating coronavirus could be spread through the air in small particles at distances more than 6 feet. They have not commented. In San Francisco, I'm Ed Baxter.
Nicola.
Yeah, this is really a story that's taken a turn. I mean,
Oh
Nicola, of course, was in the news, being celebrated, big deal with GM. A lot of folks hadn't heard of them, and
$2 billion investment, right? $2 billion.
Yeah, it turns
GM.
out there was maybe some funny business going on and facing an uncertain future, according to Ed Ludlow and David Welch. Talk about a baller alert byline. Following the sudden departure of its founder and chairman in the wake of regulatory probes and a collapse of its stock price. We have watched this go down.
Yeah, I don't even take a look where it is right now, but yeah, so it's got, I mean, listen, this is kind of wild to see this, especially so soon after GM, made that $2 billion investment. And as for GM, who also saw their share price under pressure today, they are not going to abandon the electric truck startup. I mean, this is part of, I guess, GM's longer-term strategy in terms of the electric world and tapping into their technology.
Right. So the stock closed down 19% today, closing at 27.58. It had been down as much as 30%, but making a recovery. Meanwhile,
back at the Happy Ranch.
Back at Happy Tesla.
Happy Tesla. Elon Musk, the chief executive officer of Tesla, saying that they have a shot at a record quarter. They put out a staff email, he did, kind of rallying his troops at the end of the third quarter as it gets near, and he's urging employees in an email to make and sell as many electric cars as possible before September 30th. He did this before, and I think it worked, didn't it? Didn't he kind of rally the troops to listen, we got to do this, we got to get them out.
Let's go, guys. Yeah, sleeping on a cot, doing all the stuff that he has to do. Please consider vehicle deliveries to be absolute top priority. All hands on deck was the title of the email. So Battery Day, that is tomorrow, I believe. So we'll be digging into everything Tesla.
It's Battery Day?
Battery Day.
Oh, gotta make sure I wear my Happy Battery Day sweater. Tesla, by the way, up 1.6% in today's session. Hey, I might have one in my wardrobe.
You could, or make a t-shirt. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Let's get you caught up on the day that was here in the U.S. equity market. Beginning of a new trading week, and we end lower for the major measures. Having said that, the market finished off session lows. A couple of things that the market really was forced to consider today, not the least of which possibly tighter restrictions when it comes to the coronavirus. In the UK, Prime Minister Johnson will convene crisis talks tomorrow on tackling a resurgence in cases. His top scientific advisor is warning the UK is on course for 50,000 new cases a day by mid-October. That would be without urgent action. And then stateside, we're dealing with the confirmation process for a new Supreme Court justice, potentially influencing heavily negotiations for another round of fiscal stimulus. Also, with this idea that a new justice may be seated soon, the potential for the court to declare the Affordable Care Act invalid. Financial shares hard hit after a report detailed suspicious transactions from a number of the big global banks. Dow Industrial Average weaker by 1.8% today. S&P 500 down about 1.2%. NASDAQ comp off just 0.1%. In fact, of the 11 industry groups within the S&P, only information technology today moving to the upside. Long-term interest rates come in just a bit. 10-year Treasury last quoted at a yield of 66 basis points. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Really appreciate that. Well, we want to get to an interview I did earlier this morning. It was with the Mahindra Group, with which Jason has a hand in kind of everything: automotive, aerospace, agriculture, clean energy, information technology. I mean, they really have this big picture look at the world. And I caught up with Dr. Anish Shah, Deputy Managing Director and Chief Financial Officer of the Mahindra Group. We talked from Mumbai. He takes over the top spot at the company come April. And here's what he had to say. We talked about a lot.
So the impact has been significant on us as well as everyone around us. We saw the month of April essentially wiped out in terms of revenue as a lockdown was declared in India towards end of March. And since then, things have come back actually very well, much better than what we expected. There are a number of lessons from this as well. And this, in my view, will position us stronger going forward. So while COVID is unfortunate and we do hope that things do get better soon, it is also teaching us lessons about how not to just survive, but how to thrive, how to deal with uncertainty. And that will make us stronger.
I am curious in terms of risk mitigation. What have you learned as a result of the virus when it comes to risk mitigation at your company?
What we've learned is we've got to, as leaders, start being able to look around corners and be able to look at various scenarios and plan for them. We talked about a VUCA world many years ago, and that in many ways is an understatement. So the world has just gotten a lot more volatile and uncertain since then. And we have to be able to plan with scenarios, take options, take certain bets that we can double down on if a certain scenario plays out.
What do you feel like comfortable in terms of predicting visibility? I mean, that's the other thing that we feel like, individuals, companies have said, we don't have any visibility for the rest of this year. We don't even know about visibility for next year. Meantime, you've got at least the U.S. Central Bank. They're talking about, they have visibility enough, at least at this point, to say we're going to keep rates really low. What kind of visibility do you feel comfortably talking about? Is it till the end of the year? Is it till next year? Or is it not? Or do you not really feel like you have any?
It's very different across sectors.
Yeah.
Difference is dramatic. So let me give a few examples. Our farm equipment business, coming out of April with almost zero sales, had a year-over-year growth in May of 2%, which we had not expected. We would have been very happy with a degrowth of 30 or 40%, and we would have said, that's great, we are getting back on track. But we had a 2% year-over-year growth. In June, we had a 12% year-over-year growth. July was 28%. August was 69% year-over-year. So the farm equipment business has really come back very strongly. The IT business expected a number of cancellations, expected customers to be under stress, but the last quarter was the best ever cash generation quarter for them. The order book is at a 3-year high. So the IT business is doing extremely well. Again, both are driven by various factors. As we look at the auto business, that's been much weaker because with the urban lockdowns, consumers have not been buying. We were at a 50% capacity utilization a couple of months ago because of various supply stresses as well. That has gone up now to 70%. Things are starting to come back. Their visibility is a little poorer in terms of what we would expect. It will take about 3 to 6 months to get anywhere close to normal. And getting back to normal may actually take even longer than that. Our holidays business in hospitality has seen huge demand. Our resorts right now, because of how we need to manage the virus, we have only about 50% of rooms available for the public because we rotate them, keep them vacant for 24 hours and so on. But many of our resorts are seeing overbookings and are finding it difficult to deal with the demand that's coming in.
The discord between the U.S. and China actually gave Mahindra and Mahindra some opportunities, that they were well positioned to take advantage of some of that discord. Is that true? Because we certainly have seen the tensions between the U.S. and China pick up. Is that even more so the case? And if you could be specific.
So we are starting to see India becoming a destination for many companies. Not as fast as we'd like it to be. Other countries are in the game as well. And India also has been doing a lot around ease of business, around creating infrastructure, and will become a preferred destination. So we're starting to see that. In terms of specifics, we're seeing companies reach out to us for collaborations in India. I can't talk about specific sectors at this point or specific companies, but we will see a lot more of that. And FDI flows in India have grown dramatically over the last few months. So that's a trend also that we see continuing to go forward.
Even with all the stresses on the global economy, you've seen that. That's impressive.
Even with all the stresses, that's right.
What do you think a year from now? Do you think we will be beyond the virus? Do you think the outlook will be much clearer? There will be visibility?
I am very hopeful. I cannot say for certain, but my sense is even before a year, once we have a vaccine in place, also the herd immunity factor, as that comes into play as well, things should be a lot better. As I said earlier, we're starting to see a lot more positivity across many industries for us, and we're hoping that continues.
What keeps you up at night, though?
What keeps me up is the geopolitical tensions. And the fact that it's not just US and China, but there are a number of tensions around the world today. The world is starting to go back to being nationalist, and global trade is starting to be impacted as a result. So those are the factors that I feel that are negatives.
So nice get, Master.
Thank you very much. It kind of was, I feel like, building on what we did a year ago at the Bloomberg Global Business Forum.
Well, that was the idea, I think, was
totally.
that we went back to our friends at Mahindra and hat tip to our producer, Paris Wald, who helped arrange all that, because Anand Mahindra, almost exactly a year ago, was on stage with us.
And was very optimistic, and that's part of how we kicked off the interview initially. And the whole thing, I should point out, because we talked for about 20 minutes or so, you can download the entire interview at Bloomberg.com. Listen to it also on our podcast feed, because you can find that at Bloomberg.com or wherever you get your podcast. But we talked, he said he was so optimistic a year ago.
Totally.
Who would have thought, here's where we were, who would have thought in January that this would have unfolded? And so to kind of find out, and they are doing kind of a hard look at their businesses and really focusing on those that have the potential to be $1 billion market cap or more and are fast growing.
Yeah, well, and India geographically, industrially, culturally sits right in the middle of the world. So great interview. So as Carol said, check that out at Bloomberg.com. A wide-ranging conversation. Coming up, we're going to talk about the Earth.
We're going to fix the world.
We're going to fix it. It's all going to be fixed.
Just if you stay here, we're going to have the answers.
It's going to happen.
That's how it happens.